Here's something that messed with my head when I started studying for my long-term care insurance license. Almost 70% of people over 65 will need some form of long-term care before they die. And almost none of them have planned for how to actually pay for it. So I've been buried in this material for months now. And the more I learn, the more I realize how few families actually understand how this product works. So today, I'm not going to sell you anything that I legally can't. I'm going to walk you through what I'm learning in plain English, what long-term care actually covers, what it costs, why people buy it, and the alternatives that exist. I want you to have a real conversation with a real licensed professional in your state instead of just walking in confused. So welcome back to the channel. If this is your first time here, my name is Winston One. I'm currently studying for my certified and long-term care designation, my Georgia life insurance license, and I'm in the process of acquiring an assisted living community right now. So I'm deep in this world every single day, the operational side, the financial side, and of course, the human side. And if you're caring for your aging parents or you're planning ahead for your own care, I want you to hit that subscribe button. We're building something special here, really a community of people who refuse to be blindsided by the care system. So quick thing before we get into it. I'm not your financial advisor. I'm not your insurance agent yet. I'm not an attorney or a doctor. This is education on how this category works. For your specific situation, you need to get a licensed professional in your state who can actually look at your numbers. Cool? All right, let's get into it. So let's start with the problem that long-term care insurance is actually built to solve. So according to industry data, the median cost for long-term care in the United States right now is right around $5,400 a month. And that's just for assisted living. If you're looking at a private room in a nursing home, now we're talking closer to $11,000 a month. Okay. And then the average person who needs long-term care, they usually need it for about 3 years. So I want you to do the math on that, right? It comes out between $200,000 and $400,000 in total care costs. And that's the standard, that's stuff that standard health insurance just won't touch, right? That's stuff that Medicare barely covers. So something that you should probably know is that the regular health insurance does not cover long-term care. In Medicare, it only covers short-term skilled nursing after a qualifying hospital stay. And that's only up to 100 days, right? With significant costs after day 20. I think now you're paying a $200 and something copay every single day, almost $6,500 a month. So Medicaid, it does cover long-term care, but you generally you have to spend down most of your assets first to qualify. So for most of the middle income families, there's this gap, and it's a really expensive gap. And that's the gap that long-term care insurance is one of the tools out there to hopefully fill, right? It's not the only tool. We'll get to some of those alternatives, but I think it's one of the tools that most people have heard of and still don't really understand how it works. So like I mentioned, long-term care insurance, it's designed to pay for care that regular health insurance just doesn't cover. Specifically, it's designed to help with what the industry calls activities of daily living. So ADLs for short. There's 6 of these. There's bathing, there's dressing, there's eating, transferring, toileting, and then continence as well. And most policies are structured to pay these benefits when a person can no longer perform 2 or more of these ADLs on their own, or when they have, significant cognitive decline, cognitive impairment like dementia, et cetera, et cetera. So, and one thing I want to note is that a lot of these benefits, they'll cover things like in-home care, they'll cover adult daycare services, assisted living or memory care communities, and even nursing home care as well. Now, the benefit is usually a daily or monthly amount up to a lifetime maximum. And that's typically the basic structure, right? Now, the specifics, your daily benefit, your benefit period, your elimination period, inflation protection, all of that really varies widely based on the policy that you have and also the carrier that you have it with. And this is where your licensed agent earns their keep, because I believe that there are real trade-offs in how a lot of these policies are structured. And those trade-offs depend on your assets, your health history, your family situation, the state that you live in, et cetera, et cetera. These are things that I can't evaluate for you over YouTube, and things that you probably should not be trying to evaluate yourself alone from a YouTube video, right? Now, what it costs is the part that catches a lot of people off guard. So I want to kind of talk about that. The AALTCI, that's the American Association for Long-Term Care Insurance. It's an industry research group. Their premiums, it's noted, vary dramatically based on the age, gender, and health at the time that you apply. So what the data is showing right now is that for a 55-year-old buying a policy, about $165,000 benefit pool, which premiums right around $1,000 a year, right? And this is for a single male with no inflation protection. Now, for a single female with 5% inflation protection, now we're looking at $6,400 a year. For a couple, both 55, once again, the combined premium in that same range, right around $2,100 a year. And that can go up to $8,500 a year, depending on the inflation rider. Now, here's what people don't understand. At 60 years old, those numbers go up. At 65, they go up again, sometimes significantly. At 70, 75, it's actually reported that most applicants are getting declined entirely. And this is because their health conditions that start developing in that time that honestly just disqualify you from some of these programs. And what the data is showing consistently is this, that the cost difference between buying in your mid 50s versus buying in your late 60s is significant. And the risk of being declined for health reasons, it goes up sharply the older and older you get. So if you actually want to see what care costs in your state, not just like a generic national number, we actually built a free senior care cost calculator. It takes about 2 minutes and it gives you a realistic estimate based on your specific situation. So comment cost below and I'll send it directly to you, or you can grab the link in the description. A real number is the foundation for a real plan. Okay. The other thing that I keep running into is that into my, while I'm studying for this, are some of the alternatives, right? Because long-term care insurance isn't the only path. There are basically 4 ways that families typically pay for long-term care. And long-term care insurance is just one of them. So I'll run you through those first. So the first way, and this is the most common, this is the one that everybody thinks about first, is self-funding. This is where you pay out of pocket, either from your investments, your savings, home equity. If you have kids that are contributing as well, this is kind of where that money comes from. Now, this only works if you have substantial liquid assets. It does not work if in a few years you can wipe out everything that you built. I actually have a family friend whose father amassed a multi-million-dollar real estate portfolio, and within the last 5 to 7 years of his life, actually spent through millions of dollars in care before Medicaid would give him a dime. As in, he essentially spent decades amassing an inheritance for his children and grandchildren and had to spend all of it within the last decade of his life. That's terrifying. That's why things like long-term care insurance exist. This is the second thing, right? It's a traditional product that I just described. You pay the premiums for years, and then the policy pays out if you need care. Okay. The third thing, it's more of a hybrid policy. Most people haven't heard of these, but these allow you to combine life insurance with a long-term care benefit. So if you use the long-term care benefit, it draws down from the death benefit. But if you never need care, then your heirs get the full death benefit. So I want you guys to look into this. It's called a life insurance policy with a long-term care rider. Also very, very powerful tools. Now, different mechanics, different costs, different trade-offs. I want you to talk to somebody licensed about this that can kind of walk you through it. Once again, you can use the cost calculator and it gives you a lot of information. We give you a lot of information over there. Okay. So the last way that people typically pay for this is through Medicaid, right? The government safety net. Now, the thing about Medicaid is it will cover long-term care, but it's only for those that qualify. This usually requires you needing to spend down most of your assets first. And the rules are changing. I'm not 100% sure what they are now. And I'm not going to tell you which of these is right for you. I genuinely don't know, right? It depends on your assets, your health, your family situation, where you live, your state's Medicaid rules, your tax situation, a dozen other things. What I can tell you is this. Most families that I've come across in the research I've done, they never even have this conversation. They don't talk about whether they're going to self-fund. They don't talk about whether they're buying a policy. They didn't even qualify for Medicaid until after a crisis forced them to spend down. They just hoped. And hope is not a long-term care plan. Now, one thing I will also add is that if you're a veteran, you do get, or the child of a veteran, you get additional benefits, right? One of the things that you get is a VA aid and attendance benefit. It's a monthly benefit for veterans and their spouses, and it covers these activities of daily living as well. I think it's significantly underused. But if your parents served, please, please, please look into it. There are nonprofits that essentially help you navigate the application process for free. I'm not an expert there, but I know that that's the kind of thing that keeps coming up in my research that families don't really know, exists at the time. Now, let me land this. Long-term care is expensive, right? The math on 3 years of care is, I believe it's sobering. And the tools that exist to plan for it, like insurance, hybrid benefits, self-funding, Medicaid, VA benefits, they all have very real trade-offs that depend on your specific situation. Now, what the research is showing me consistently is that families who plan early, they have more options. Families who wait, they have fewer options and they actually end up paying more than for the ones that they do have, right? Once again, not selling anything. That's just simple pattern recognition from somebody who's been living and breathing this material. So here's what I want you to do right now. I want you to use our free senior care cost calculator. I want you to put real numbers to what care costs in your state, not national averages, your numbers. Comment cost below. I'll send it directly to you, or hit the link in the description. Once again, a real number is the foundation of a real plan. And a real plan starts with a real conversation with a professional who can look at the full picture. I'll get there myself in a few months once my license comes through and all that. Until then, I'm doing what I can. I'm sharing what I'm learning honestly, transparently, and as best as I can so that you can walk into these conversations prepared. Okay. Once again, I'm Winston One Day. Plan early, plan smart, and please, please, please take care of one another. I'll see you in the next one. Peace.